Smokers, folks, do we have a lot to talk about in today's video? I got to show you what's going on in the banking sector on Wall Street. Some news got announced today that kind of, in my opinion, went on the DL, and no one's really understands kind of how to view this news, and I want to show you exactly what happened here and why this is such a huge deal and what it really means for the overall stock market. So this is going to be a very action-packed video. We got a lot to get into, so let's just get straight into it. Hope you guys enjoyed as always. Thanks so much for joining me. First thing I want to look at here is S&P 500 heat map for the trading day here today. A lot of red out there today, a lot of red. Not like a viciously red day where it's like end of the world type pricing action, but a lot of red, except for a few sectors. It was definitely a flight to safety today, or what is seen as safety at least. Look at the healthcare stocks, healthcare plans. Look at insurance stocks. Look at utilities here today. And the one thing that no one wants to see bright green, other than maybe if you own these type of stocks, is the energy sector. Oil and gas stocks, bright green. No one wants to see that right now, once again, other than if you own those type of stocks. And basically how it's been working, at least in the market the past month or so, these babies bright green, everything else goes red. It's just kind of how it works, at least recently. And if these goes red, then the market turns green. And why are all the energy and gas stocks up today? Well, all the oil and gas stocks are up because oil's having a good day, natural gas having a good day. We have two main factors that are going on. Oil prices edge higher ahead of G7 talks on new Russian sanctions. That's obviously pushing price up. The second thing is, guess what's coming up? July 4th weekend. Huge travel holiday. Should be very, very busy out there on the roads. Obviously, a lot of people flying around. Energy should be, you would assume, at least hot for the next week or two. And we'll see after that, right? But in terms of like bullish catalysts for the short term between July 4th weekend and these new Russian sanctions potentially here, obviously it's going to be very bullish in the short term for oil and gas prices. But, you got to remember when it comes to these things, they're very short term moves, right? Everybody's getting excited about July 4th holiday and what that's going to do to obviously demand. On the demand side, well, once July 4th weekend passes, then it's like, what happens after that? So, this is just how these markets work. They get very caught up into the short term and what's going on there, right? You look at all the oil and gas stocks here today that I have on my watch list: Valero, Devon Energy, Whiting, Marathon, Phillips, EOG, APA, which is old Apache. I don't know how many of you guys have been in the stock market for a long, long time, but this used to be Apache. Now they're called APA Corporation. ExxonMobil, Occidental, Chevron, Shell, Chesapeake, BP. How Chesapeake never went bankrupt is still beyond me. Anybody that's been in the market for a long time, how much debt they had at one point. ConocoPhillips, all these babies super green today. Obviously, Valero and Devon being the big dogs of the bunch in terms of the greenness. 8% for Valero here today. Devon Energy, 7.5% move there. And you know what this makes me think? Seeing the market start out red here this week, it brings me back to something that happened this weekend. And by the way, big tech, everything just red across the board here today. Except Apple. Apple just remained unchanged. But that big thing is this. Remember I brought this to your guys' attention? JPMorgan sees portfolio rebalancing, lifting U.S. stocks 7% this week. Well, shoot, this is like, when you start out a race and you're in like last place and you need to try to catch up to everybody, because we just started the week red. All these stocks red, right? Red Dead Redemption out there. And so here we are, JP Morgan. Now we're going to need to play a lot of catch up. So these next 4 days, if we want a chance, because right now the markets aren't cutting the mustard. Wait a minute. That was too much. Okay, that was too much. Before we get into the guts of this video, I want to make sure we shout out FTX US. That is official partner of the channel. FTX US is the best crypto exchange in the world, and maybe the only one that actually has their stuff together. FTX US has fees that are up to 85% cheaper than competitors, trusted by millions of users. You can do recurring buys right through the app, essentially. So if you want to buy like $20 of an asset each week, or $30 or $10, something like that, without having to worry about the pricing and just automatically gets bought, you can do that right inside the app. You can actually get free crypto on every trade over $10, which is pretty darn amazing. They also just got in the stock brokerage space. Now, Sam has denied that they're trying to buy out Robinhood, so we'll see what happens with that. I don't have any information on that whole situation, if you're wondering. I don't know. That's a whole up in the air thing, but FTX, get up to $100 in free crypto, and use referral code Holy Smokers when you set up your account, and make sure you take advantage of that. Once again, get free crypto on every trade over $10. And I'm really excited for what they're going to do in the stock brokerage space over time as well. Now, I wanted to bring to your guys' attention Fintech. And how far these stocks have dropped in such a short amount of time. I don't know how many people are really caught up on the fintechs. Square stock, for instance, Block, is down over 75% in the past 10 months. Over 75% in 10 months. And these aren't like small companies either. Even after this massive drop, Square is still a $40 billion market cap. And it's we have never seen drops like this in recent history other than 2 times. We saw this happen in the great financial crisis. Some of these stocks get hit, 60, 70 plus %. And we saw this in the tech bubble. But outside of those 2 times, we haven't seen any time in, the past 30, 40 years, stocks drop like this, right? PayPal, look at this stock, 74% down in 9 months. And this is an $87 billion market cap. At one point, it was several $100 billion of market cap. I mean, this is the same amount of time it takes to make a baby, man. 74%. Come on, you got to be flipping my flapjacks. Affirm. Oh my gosh, 8 months. This stock is down 86.5%. This is a buy now, pay later company. A direct play on that. I mean, wow. SoFi. 8 months, this stock is down 74%. I actually kind of like SoFi. I don't personally own the stock, but I got to say I've been impressed by their conference calls and their clients and everything like that. But my gosh, guys, 74% in 8 months down for SoFi. Upstart. The last 8 months, this stock is down almost 89% in 8 months for Upstart. Oh, Coin. 84% down in the past 8 months. Oh my gosh. Coinbase, by the way, they just got downgraded by Goldman Sachs here today. So that's why the stock was down another 10% here today. Basically, Goldman saying that obviously because Coin makes a ton of money off of people trading crypto. Crypto market has not been in a very good place, as we all know, right? And so volumes likely just aren't going to be there, at least for this past quarter and at least probably for the rest of this year. And so therefore, Coin's not in the best position, obviously. 84% down there. Coin, Hood, 10 months, stock down 87%. And the worst part is this stock was up 14% today on the whole rumors that, FTX might try to buy Robinhood. So it was up 14% today, and still the stock is down 87% in the last 10 months. Like, it's very rare you see a stock down 87% and it was up 14% on the day. Like, oh my gosh, man. But the fintech devastation has just been awful to be honest. You know what hasn't been awful, and this is good to see? Commodities somewhat coming back to earth and starting to move in the right direction. Oat futures down again today. Love to see this, okay? And obviously for all Oatly shareholders, we need to see oats continue to come down and down and down. Corn was down here today. Wheat was down here today. And when it comes to these commodities, something very important to understand about these commodities market is when it comes to commodities, it's like many things in the financial markets, it's not just as simple as supply and demand. You also have a lot of people that are trying to place bets that this commodity is going to go up or this commodity is going to go down, similar to stocks, right? And so sometimes these markets can work perfectly in terms of like, oh, the supply is going up, so the price has to drop, and demand's going down, so the price has to go down. Like, sometimes it works perfectly like that, but many times it does not. And many times how these markets work is on speculation. And, I think oats are going to go up, so let me try to buy up oats, right? And so that's just, it's and they do have all types of instruments on how these things work. And so there's something important to always remember is the commodities market is no perfect supply and demand game. It's very much just like the stock market, a game based upon speculation and belief that this thing's going to go up or down in the short term here, okay? So I do like to see that. We need to see commodities continue to come down. If commodities continue to come down, and hopefully we can get oil and gas down after the July 4th holiday, if things like that happen, it's going to help the inflation numbers get a lot better. It's going to obviously help the economy because, the more expensive oil is, the more expensive gas prices are. The more expensive all these commodities like oats and corn and wheat and all this stuff is, the more expensive food is. So that's not obviously an ideal situation. It makes inflation numbers look worse, and it takes money out of people's pockets at the end of the day because that loaf of bread's more expensive. That's just the way it works. So let's hope things continue to go down there, okay? Some good news for the Chef shareholders. This just came out a few hours ago. The Chef is going to be added to the Russell indexes, okay? The Russell Microcap Index. So, yeah, excited about that. And that's good news. A lot of these 2020, 2021 companies that went public in either 2020 or 2021 are going to be added to different indexes over the next few years. And so step in the right direction, man. Just the first of many. As far as travel stocks went, all these babies Red Dead Redemption today. Why? Well, simple. Oil price up. Oil price up, these stocks down. It's almost as simple as that. And that's just, if you follow a correlation between these travel stocks last few months and oil price, it's just the way it works. Oil prices go up, these stocks go down. Oil price goes down, these stocks go up. It's literally as pretty much as simple as that the last few months. And you can find the trajectories. It's just almost identical, right? And a lot of these stocks have just been hammered. A few of these stocks came back pretty strong last week. So, like CCL was down like 8. Now it's up to 10, so I came back pretty strong, but they're still down massively, okay? Now, this is huge news. And I want to explain why this is such huge news and what this exactly means, okay? So this came out of JPMorgan today. JPMorgan Chase's board of directors intends to maintain the quarterly common stock dividend of $1 per share in the third quarter of 2022. In light of higher future capital requirements, the firm's quarterly common stock dividends are subject to approval of the board of directors at customary times that the dividends are declared. There's so much more than that meets the eye there, okay? Jamie Dimon, Chairman CEO, JP Morgan, the Federal Reserve's 2022 CCAR stress test once again shows that banks are able to be a source of strength in the broader economy while withstanding extreme market shocks. We continue to maintain a fortress balance sheet, including robust governance and controls, strong revenue growth, and profit margins, and we remain committed to serving our clients and customers. We will continue to use our capital to invest in, grow our market-leading businesses, pay a sustainable dividend, and retain capital to fully satisfy our future regulatory requirements. Okay, now. The reason this is huge, what I just read to you there essentially, is, Citi, JP Morgan, they decided to not raise their dividends essentially, okay? And several of the other banks did very, very small raises of the dividend. Now, why would you not raise your dividend if you're somebody like a JP Morgan? Well, a big factor could be potentially you see some storm clouds on the horizon, dare I say a hurricane. And so therefore, if you see a potential weakening economy and you're starting to get worried about that, it would be prudent of you to not raise your dividend, right? And to maybe at best case scenario, just keep the current dividend you're paying out because you're not very confident. If JP Morgan was very confident, maybe they could have raised their dividend. And so this is a situation we're looking at here where this shows you that I think the banks are a little worried and a little concerned about what's going to happen in the overall economy and what that could mean for potential defaults on loans and things like that. And is there any sort of systemic problems? And so I think this is JP Morgan playing it as safe as possible right now. JP Morgan can't go out there and cut their dividend right now. If they were to cut their dividend, that would send a signal of like, oh my gosh, like what's going on? JP Morgan's cutting their dividend. Are they really that scared? That would almost cause borderline panic in the market. But in my opinion, looking at this and viewing this, that they're not raising their dividend, I think it's a pretty big deal. Now, the only one that really raised their dividend in a big number was Goldman Sachs. Goldman Sachs decided to raise their dividend by 25%. So you might see that and you say, okay, well, some of these banks, most of the banks are either not raising their dividend or slightly raising them, but Goldman Sachs goes out there and raises 25%. So that means all clear, right? Goldman Sachs knows everything. Goldman Sachs is really, really smart. So they're raising big time. Well, a lot more. You got to dig into these things, man. You got to dig into these things. And it's very important. And this is why if you've been in the market for a long time, you kind of know what's been going on for a long time here, okay? Here's the deal. Goldman Sachs in 2009 had net earnings of $13.3 billion, okay? It was in a dramatic, crazy market. They had arguably the best year in the company's history, or certainly one of the best years, okay? And you say, well, wait a minute. So Goldman Sachs is raising their dividend. They feel pretty confident that they can make money, don't matter what happens here, right? And if we dig a little deeper here, pulled up their 2009 annual report. Look at the difference between 2008 and 2009, okay? So 2008, the company does like $9 billion in trading and principal investments. However, 2009, $34 billion in trading and principal investments, okay? And so in a messy market, Goldman Sachs can still make really good money, and potentially have the best year they ever had, right? And this was a lot of bets paying off, and you never really get to dive deep into these bets because I even was reading through that annual report, and it's so funny how Goldman Sachs doesn't really speak too directly on what exactly generated them $34 billion in trading and principal investments. But we know it happened, and it's a massive number, but they don't really get into the details of like, oh, we made, $2.6 billion from this trade, and we had this derivative that brought us in $5 billion, and we had this thing. Because the fact is, Goldman Sachs can make bank from a volatile market. And this was something that caused a lot of people to be very, very frustrated because they saw all this money, right? Net earnings of over $13 billion. This is something that helped prompt, I don't know if you guys remember this back in the day, but it was like this whole people were even like standing with signs outside of Wall Street and whatnot. They were very, very upset at Wall Street because Wall Street got bailout money. And then next thing you know, they were making all this money. Then also they found out about how Wall Street was basically, had all these different programs for like bundling mortgages and things like that, and how much of a mess that caused in the market. And the collateral debt obligations and everything that was happening there. And this caused a lot of frustration. And then to add insult to injury was Goldman Sachs making so much money coming out of that situation, right? While most people were, we had unemployment near 10%, we had the economy in a mess, and then Goldman Sachs is like, oh yeah, we just made $13 billion of net earnings, and everybody's like, what? Okay, and so, you can't get too confident, I guess you can say, about seeing Goldman Sachs, raising their dividend 25%, because this is a company that they're very confident that even if the market went crazy, bad, whatever, they would still be able to make bank because they've done it before and they've proved that before. That's Goldman Sachs at the end of the day, okay? And so, this is going to be a very, very interesting week, in my opinion, for the markets because, we have this going on. Everybody's looking at this and like, okay, where's our 7% this week? We started out the week red, and it's going to be a busy week, man, guys. There's going to be a lot going on, and we're going to see how it all plays out. So hope you guys enjoy this as always. Thank you so much for joining me. I appreciate you. Make sure you check out FTX US. That will be the first link in the description. Also be pinned comment down there and get you a free crypto. And don't forget to use referral code Holy Smokers. Much love and have a great day.